What's a mortgage recast and how do you know if you need one? Well, here to talk with me about that is Dana Anspach from Sensible Money. Dana, welcome.
Hi, Bob. Glad to be here.
Glad to have you here, Dana, because mortgage recast is a term, quite frankly, I'm not familiar with. So maybe start with what it is.
Yeah, so a lot of people pay extra on their mortgage, or maybe they have an extra sum of money and they want to put that down on the mortgage, but it doesn't actually change your payment, right? It might help you pay down the mortgage faster, but the payment you have to make for the remaining term of the loan is identical, even if you've been paying extra on the mortgage for a long time. So suppose you have a big lump sum and you want to put it down and lower your payment. Is that possible? It might be if your mortgage allows something called a recast. And what a recast is it's when the mortgage company re-amortizes your loan. So the interest rate stays the same. The remaining term on the loan stays the same. They're just taking those extra payments you've made, they're applying it to the balance, and then they're recasting that mortgage over the remaining term of the loan using the exact same interest rate and payment schedule.
So many people are familiar, obviously, with refinancing. How does it differ?
Yeah, so a refinance, you're having a new loan, right? You don't get to keep the terms of your own old loan. You have a brand new loan at the then current interest rates. With a recast, you don't. With a refinance, you're paying, all kinds of fees. You might have to have the property appraised, or you have some kind of closing fees. You're going to get whatever the current interest rate is. If a recast is allowed, you basically have the same mortgage you've always had, the same company, the same terms of the mortgage. It's just a lower remaining balance, and they're recasting the loan over that remaining time frame. So it can be far more advantageous than a refinance, of course, unless interest rates have gone down. If interest rates have gone down and they're substantially lower than your current mortgage rate, you might want to do a refinance. But many of us have interest rates that are locked in at these low rates. And so if we wanted to lower our monthly payment by applying more money onto the balance, we wouldn't want to refinance. That's where a recast, if it was allowed, could be quite beneficial.
Right. Any other advantages?
Well, I think I mentioned there's not any of the closing costs that are associated with a typical refinance. Allows you to keep your current interest rate, which that's going to be an advantage if you have a current low interest rate. And for people who had a mortgage where they had the PMI, the mortgage insurance, right? If they are able to do a recast and now their remaining balance is low enough relative to the property value, they may be able to get rid of that mortgage insurance. So that could be another reason to do it.
So, Dana, when would you typically recommend a recast?
Well, I've come across a few situations where they made a lot of sense. When someone is, we work primarily with retirees. And so when we have someone who's moving properties in retirement, you've accumulated a lot of stuff. Sometimes you don't want to sell your house, put everything in storage, rent for a while, and then go find your new property. So in those situations, we've had people who were able to get a mortgage on their new house that they were buying, then sell their old house. And once they got that lump sum out of the prior property, they were able to apply it to the mortgage on the new property and then recast that mortgage to keep their payment lower. And so that has been a very successful use of the strategy. Another case would be someone receiving an inheritance or a big deferred comp payout. So maybe they're working with a deferred comp plan and it was all set to pay out as a lump sum at retirement. And so then they may have enough cash to make a dent in that remaining mortgage balance, but not enough to pay it off completely. And so they would use that recast again to pay down the principal and then have a much lower payment going forward on the remainder of the loan. The other situation I can think of would be perhaps someone who was part of the FIRE movement, financial independence, retire early. I don't typically work with that demographic, but many of those people are paying extra on their mortgage as they go along. Maybe they've been trying to, get it paid off early, and perhaps there was a change of strategy or they lost a job, and now they're sitting here going, wow, how do I lower my monthly outgoing expenses? So that could be a reason to recast again again, if the mortgage allowed it.
When you talked about retirees getting maybe a lump sum at retirement, the notion, at least to me, is that if housing expenses represent a third of your potential expenses in retirement, lowering your monthly payment could go a long way toward freeing up some cash for maybe non-discretionary items.
Yeah, it's not only freeing up the cash. I mean, there's only so many assets to cover all of your expenses throughout retirement. But if you're having to withdraw money from savings and investments to make that larger mortgage payment, then you're also subject to something in the markets that we call sequence risk, the volatility of the market. So if we can lower that mortgage payment going forward, and now you're having to withdraw less from your savings and investments to cover that payment each month, there can be some ancillary benefits. It might also entail some tax savings, depending on if you were having to withdraw from IRAs. So there can be all kinds of reasons that that could be advantageous to your retirement income plan.
So a couple things. I ran mortgage recast through the AI machine, and a couple things came up, things to consider before doing a mortgage recast. One being whether you meet the minimum lump sum payment amount.
Oh, so some mortgages will require a minimum amount. I've seen $10,000 as a common number that's used. So if you're not paying at least $10,000 toward the principal, you can't recast. Some mortgages will only allow you to do one recast per life of the loan. I've heard of other mortgages where you could recast more often. Matter of fact, anytime there was at least $10,000 to pay down on the principal, you could ask for a recast. That sounds very generous. I would think administratively, not as many companies would offer that. One thing we do recommend is that when people are taking out a new loan, they ask about the terms. So they ask, should I want to recast this mortgage in the future? Is it allowed? How often it is allowed? What are the terms? And ideally, you're going to want a mortgage that can be recast at some point, just in case you ever need to use it. And I think per AI, we also saw that FHA, VA, and some of the, I can't remember the term, USDA, which are like more of rural area government backed loans, typically don't allow recast. So although we wish you could be guaranteed to recast your loan, you have to check with your lender and see if your particular mortgage allows it.
Yeah, and it strikes me from the AI bot that the fees to do this are not they're nominal for the most part.
These are so reasonable, particularly when you compare them to what a refinance would cost. So typically you're looking at about $250 administrative fee to recast the mortgage. Think about it, they don't have to go through underwriting, or any of that extra paperwork, right? It's the same mortgage you have. They're just recasting the amortization schedule. That's really all they're doing. You know, Depending on the lender, the fees may be a little bit broader, as low as 100 or up to 500. The ones that I've seen with our clients typically came in at about a $250 processing fee.
Yeah. It also strikes me, Dana, that if someone were in a position to have cash to do a mortgage recast and they were working with a financial advisor, that this should be sort of required as part of the intake or questionnaires with respect to, is this does this make financial sense for someone?
Yeah, and that's really a whole nother issue, right? Should I pay down on my mortgage in the first place, right? Does that actually make sense? And oftentimes, we will see studies that say that retirees that get to retirement without a mortgage are more well off. I don't know if that's the right terminology, but, feel more secure, more financially secure. But really, that also is dependent on the demographic. As you get into higher net worth households, having smart debt and, a reasonable interest rate mortgage on your house is smart debt can make a lot more sense. So if you're in a demographic with a net worth of less than a million, paying off that mortgage may have, a lot more advantages to you than someone that's in a higher net worth demographic. But yeah, that should always be part of the consideration. If you have a mortgage that's at 2.75%, should you be paying it down at all? Right? That would be one of the questions. But if you're in retirement, and as we talked about, if your payment is large and you're going to be having to take withdrawals from other accounts, and let's say those withdrawals are all from 401k or IRAs, so every dollar you take out is taxed, well, you can't just look at the interest rate alone and determine the answer. You need to look at the situation in its entirety.
Well, we covered a lot of ground. Not sure if we missed anything or anything bears reemphasizing, but I'll leave that to you.
Well, who knows? There's probably something we've missed, but we wanted to just have a general overview of the topic, realizing that a lot of people have never even heard of recast and never considered this as part of their financial plan. It's something to keep in mind.